Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome back to the podcast Become Sensible, where we discuss about practical business finance, business growth for everyday business. So today we discuss about one of very common topics, that is, as a business owner, as an S Corporation business owner, how can you pay yourself? We probably get the question almost every single week. So I hope that this episode will be super helpful for you, especially for the business owner. Just select an S Corporation for your LLC. Why this is like a very common question. And you can also listen back for one of the episodes that we have is about why S Corporation is a very great option for your business. Because as a business owner, if you have a sole proprietors or you are a single member LLC, most of the time you will need to pay tax on the net profits. It means that whatever the revenue you have, for example, $500,000 in revenue, and after all we spend, you may make, for example, make an even number is $200,000. That $200,000 is where you pay tax on the net profits. And as a single member LLC or sole proprietors, beside a federal income tax, you need to pay for Medicare and Social Security tax, which is we call self-employment tax. And that is 15.3%. So if your net profit is $100,000, that is $15,300 for self-employment tax alone. If you work for a company, for an employers, they will pay half of this self-employment tax for you. So you just only need to pay half of it. So that is why most of the time, if your business make a profit more than $50,000, at least $50,000 in the net profit. And that is why always consider that your tax is on net profits, not on revenue at all. So if you make a net profit at least $50,000, we normally advise people and business owners to convert it to become an S Corporation, because it's the way that you can save yourself in terms of self-employment tax. For example, if you make $100,000 in net profits, if you pay yourself $50,000, that will be $7,500 in tax for Social Security and Medicare. The rest of it, $50,000, you only pay federal income tax on that. And it saved you basically $7,500. And I make these is even numbers so that we can easy to talk and discuss about it. But many business owners, if they make $200,000 in revenue, and they can save with other tax strategy, they can actually save $20,000, $25,000 in tax. That is a lot of money in terms of tax. So that is one of the main reasons to consider to become an S Corporation. If your business grow and you have a sizable in terms of net profit, then now you become an S Corporation. So how you pay yourself at all? And the IRS, they're smart. They not okay, you can pay yourself random number and that will be okay. But if you overpay yourself in salary, it's enough for you to pay both self-employment tax with 15.3, because now you place both by employer and employee side of your own salary. So if you, for example, if you pay for yourself $200,000 in W-2, it means that you will pay a lot of self-employment tax on that, Social Security and Medicare tax, because you become an employee of your own company. So the hardest part is how to calculate that balance between the salary for yourself and the distribution. And we always get the question from clients say, oh, Fiona, I live in New York, and there's no way that I can live on $50,000 salary at all. which is true because it's New York City's like very high cost of living. And I say, once you become an S corporation, there's nothing prevent you to actually get a distribution for yourself. And I mean, like in a single member LLC, most of the time, the money that you pay for yourself is considered as the owner draw. But once you become an S corporation, beside the salary for you pay for yourself, anything else is called owner distribution. So it's mean like the payment towards you. The distribution toward you and the salary for you, it needs to be like balanced, because if it's more in terms of salary for yourself, you don't save a lot in terms of tax. But if it's less, you have a problem with the IRS, because they will say, okay, you need to meet the reasonable salary. And how they calculate a reasonable salary is based on what type of industry that you are in and what type of job or thing that you take care in your business. Normally, they have a formulation and calculation. Like if you take care like 10% of your business is say in administrative, like you respond to email and all that. But then the most of the time you focus, if your business in service industry, you focus a lot of your time in deliver the work. Then this is directly into the result of your business. Then they calculate in the different way, because if you direct consultant and deliver the result, then that will be in the rate of consultant or the people who has similar skill and experience like you, and depends on the zip code or where you locate. But then if you say that you deliver 50% and 50% of it is in administrative, then the part of the time that you spend on administrative is more probably in the different rate than direct consultant. So that's just like where thing is just calculated. And normally we have a software that we plug in your information in to calculate for you. But if you underpay yourself, what will happen is the IRS will say, hey, that is not reasonable salary for you at all. And they think all the distribution for you, they will reclassify it as a salary for yourself, which they absolutely handle. Like for example, if you pay for yourself only like $20,000 in like salary, which is where you pay Social Security and Medicare tax, and the rest of it $100,000 is for the distribution, and they will say that doesn't make sense. They say you should get paid like $60,000 in salary and the rest of it's a distribution. So they will reallocate that $100,000. 40 of them will go into salary, and they help you to pay Social Security and Medicare tax on that part. So it's always wise to be like someone have a like professional, and they have an experience actually to help you to calculate what is your reasonable salary, because you cannot give yourself a random. And I see so many times the people pay themselves like $10,000 or $20,000. It doesn't make sense and look great at all. The IRS stays smart. They don't let you just decide whatever is reasonable for you and you choose to do it. It needs to be reasonable compared to the markets and to the industry that you are a part with too. So that's just like how you balance between your salary and your distribution. Of course, the distribution, the total compensation package for you between your salary and distribution always also depends on like where you live, how much is your personal finance actually need and obligation that for you to take care of your personal life too. And that's also the factor that you can consider it too. But then now, after you have a reasonable salary and the distribution between these two, what the next step, you actually should set up a payroll. And if only you as a employee in the company, I would suggest you like any like payroll company that easy to use, like Gusto, for example. We partner with them, but I don't have any like revenue sharing or commission or anything. If it's easy for people to use, I would recommend for them to use this, because payroll is something that actually more complicated than many people recognize it at all. So if you set it up yourself with Gusto or even ADP Run, the thing is you will need to have a withholding tax ID with your state, because now you become an employee of your own company. So they need to withhold tax on your salary to deposit to the state. And then it will at least depends on the states. At least you need to have a SUI number, which is state unemployment insurance number. Other than that, for other states like Massachusetts, California, or like New York, they actually require a lot, so much more, like family care IDs and many different things that in terms of regulation that they require. So it depends a lot in your state. If you happen to live in the state that have a so much sophisticated requirement, talk to a professional that they will help you to register this information and navigate all of the requirement in terms of regulation. And then set it up with this payroll that turn it on automatically payroll for every 2 weeks or even at least one per month, so that it's like it withdraw the money, withhold the tax, and deposits to the state, and they take care of the payroll report. And I know in the previous generation of accountants, they most of the time they do this by manually. They go to the state, they file it for you, and it's a lot of like small thing that people can make a mistake and also can forget on filing for you. This company, they professional and they have a lot supporting people in the system so that they will take care for you. So I would suggest use a professional payroll company. It just save you so much time and headaches in the long run. So that they will take care of your quarterly payroll report, yearly payroll report for the IRS and to the state agency. And that should be great for your position in terms of like payroll. So then at the end of the year, I always think that as an S corporation, by the last quarter of the year, you should have a tax planning section. The reason why is because now you can take a look on, okay, how much did you actually withhold during the year already? How much is your salary for year to date already? And this is your contribution for retirement account, for other benefit that in terms of tax strategy that moving in the right direction. By September, October, and November, you need to know where you are at in terms of tax. And if it was in the right direction, you don't need to do much in terms of just your strategy. But if it's not, maybe you will need to a fully contribution for your retirement account, or maybe you need to adjust the balance between the distribution between for yourself and the salary, because the net profits of the business also like adjust how much is your salary and how much is the distribution for yourself. Because if the business make like $500,000 in net profits and you only pay yourself $50,000, that is obviously will be like a red flag. They don't say it, but it's just obviously pop up in the way that this is unreasonable. And maybe that's will be like open the questioning from the situation. So those things, make sure that you're taken care by the last quarter of the year so that you can balance everything else. And remember, as corporation, everything deals on March 15th. So if this year you are decided that you want to become an S corporation, you have around like 1 more month to take care of it. So don't forget, if you select an S corporation, you need to mail it out. And our client, we always tell them either faxes, and if you mail it out, you need to have a certified mail so that you can track the record whether you actually do that. Because that is the part of will affect how you file the tax return. And some people don't actually understand this. You cannot coming back and change the effect date of your S corporation selection effective date at all. Because they say they lost it, they didn't receive your application. They will roll over to the next year to become effective S corporation for you. So you lose basically 1 year of S corporation effective, and that can cost you $20,000 in tax. That's obviously can affect your tax situation. So make sure that you do it on time and have a record that you actually mail it out. And if during the year you don't get any communication from the IRS about whether your S corporation selection were ineffective, make sure you call in to them and follow up with them to make sure that they actually get your application is actually effective in this year, not roll over to the next year at all. So I think that is all for the episode today. Your action checklist is number 1. Make sure you know how much is the profits of your business for this year. How much you will pay for yourself in terms of salary and how much is the distribution for yourself. Talk to a professional CPA, tax accountant that actually know how to help you to navigate this part. Number 3, set up the payroll so that you can automatically on the payroll and take care all the withholding, all the setup that need to do relate to the payroll. And number 4 is make sure you come back by the last quarter of the year to make sure that everything in terms of your own salary, your distribution, and your profits, it does make sense in the total amount of it and addresses if it needs to be changed. And finally, if you decided to become an S corporation, you have until March 15 to make this year happen. Anything after that, it will run over to the next year. And make sure you have the record that you actually merit out your application or your selection. And I think that's all for today. And I hope that is super helpful for you. And please let me know your questions, your comment. And I cannot wait to see you in the next couple episodes. Thank you and bye-bye.